So the market continues to be really resilient, ending the month of October, a really good stretch of 6 month October with Amazon kind of beating their earnings and the market responding very well to its earnings report. That's very good for the consumer, especially relative to consumer staples. So I'll break down that relationship in the preview today. Small caps joining the party. We'll talk about the small cap index and why that's important in today's preview as well. And then volatility and stocks both rallied today. So what does that mean going into next week? I break all of that down in today's preview video, so let's go ahead and get started. Today is Friday, October 31st, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we go on too far, a reminder, today is Friday, so this is the free Friday video. If you click this link right here, it takes you to this page, to the Market Outlook blog post. Generally, it's always free for everybody, but today it will have the full version of the video. Now, when you click that link, it will take you to this page. This is what it will look like. It'll ask you to either subscribe or to log in. So if you're already subscribed, just click this login button. If not, click this blue button. That will take you to this page. In just a matter of seconds, you can subscribe for free. No spam. You can unsubscribe at any time. Really easy way. And once you subscribe, this link also takes you right to this page. Again, subscribe for free, and then go to that Market Outlook blog post. And then today you will see the full version of the video. So you get that all of our basic subscribers get that every Friday, the Friday video, including the trade idea. Right now, granted, if you want to. We'll talk about this later, but if you want to get the full version every day, you can just upgrade to the foundation tier right here. All right, let's take a look at what happened here today. So, the market ended up pretty much within the same range it was yesterday, a little bit lower than the post-FOMC range. So we were pretty sideways on Tuesday, Wednesday, and then down a notch, pretty sideways pretty much today and yesterday. So not a very, not a big move. We were up. We ended up about, 18 points on the day, so it's actually not bad, but we still finished below the Hakinashi close. I mean, great bullish candle, higher high, higher close, closing above the high. I mean, that's about as bullish of a candle as you can get. The PPO still rising, not quite in the upper decile yet of the past 3 years, but still pretty darn bullish. But closing below the Hakinashi close opens the door for a transition candle next week. So that's something to keep an eye on there. With today's rally, it was interesting because the VIX actually moved higher by the end of the day today, and that's a combination you don't typically get. Now, on a relative basis, it ended up dropping into the close. So you can see here's what it looks like on a daily chart. So we ended up higher, coming off of the highs of the day, but ended up higher. And you can see, but we finished right for 3 straight days, right, pretty much in the sweet spot of risk on territory when it comes to volatility. The one thing that does stand out is the VVIX. So we're going into next week, again, with the possibility of a transition candle, which if it's also a bearish candle, if the regular candle is bearish, then that can be a reversal candle. So we're going into there with a little bit of we're above 100 on the VVIX, and our jump in the VIX, and not quite, the VIX is not quite up above its moving averages. It's kind of sitting right at all of these average values, but at least it's still below the 200-day, and that's a good sign. So one of the big reasons why we were higher today is because of Amazon's earnings. It really came out and jumped up higher, and it had an impact on this ratio. We've been really closely watching the ratio of discretionary stocks. And remember, these are both cap-weighted ETFs. But discretionary stocks relative to staples, and a really strong move. We're above 60. We have been bullish. We had a little bit of a pullback here in October, but we rebounded in a pretty decent way up to the upside. Remember, this is mainly Amazon and Tesla in XLY, Walmart and other discretionary, Coca-Cola, Pepsi are some of the bigger names in XLP. But a pretty decent, we're already pretty strongly bullish as it is. CCI is up at high levels. The DMI down here is at pretty decently bullish, not as bullish as we've seen, but relatively bullish. So that's a nice trending move. The 8 and 17 day crossing back above the 17. One other aspect of looking at this is from the small cap sector standpoint. If you look at the growth areas of Russell 2000 versus the value areas, which again is strongly correlated with the S&P 500 when the growth outpaces value even in the Russell. You can see we're moving up higher there. So nice, good jump, nice, good run here. All these indicators are all showing bullish. So on one hand, the volatility is a little bit sketchy going in next week. But the nice thing about that, if it is elevated, then it can drop some next week if we remain bullish. So that's actually one of the positive signs of being elevated. Finally, if I take a look at SPX here, again, the breadth was not very good and continues to not be very good. Like, we were negative pretty much all this week. We had 2 Hindenburg omens this week. The net new highs still isn't strongly positive yet. You can see the number of stocks above the 50-day moving average still flirting with 200. The net new highs barely avoided the 3rd straight Hindenburg omen, but down easily below its average. The average is falling as we've been rising. So the breadth, there's still a significant breadth divergence here. And the other thing too that continues to be a kind of a thorn in the side of risk appetite is if gold continues to falter, right? We had a good Thursday, but a pullback is still below moving averages, and the dollar itself, because that's been strongly correlated with risk appetite. And you can see the dollar finished the week strong and closing above all these recent highs. So that's something that might be one of the reasons why volatility is higher. So if the dollar able to kind of like get a little bit of a divergence, move back to these moving averages and stay below the 200, and gold were able to kind of stabilize and at least make a run back up to these highs. I don't think it will go back up through them, but if it kind of like this, make another run at least back up to it, then you can see with a drop in volatility next week that we can have a pretty decent week and avoid a transition and end up with another bullish candle. And I think that's probably where I lean in that direction, again, until I'm proven otherwise. So that does it for the Market Outlook preview. Again, remember, all of our free subscribers and Market Scholars get access to the full version of the Market Outlook. Just click this link right here. This link actually will give you access if you subscribe to our foundation tier. It will give you access to the full version every day. But the links I showed you earlier in the video, click those links. That will give you access to today's video for free, and as well as every Friday. But again, for $29 a month, you get access to all of them, all 5 of them, every day of the week. You also get the trades those 5 days. You also get the Market Outlook Live. See, you'll get the trade idea from today's video, but we already put the trade on before the market closed during a live stream called our Market Outlook Live. You get access to that 3:30 Eastern time every day. You also get access to our Market Outlook Live trade tracker, where we track the results of all these Market Outlook trades throughout the entire year, so you can kind of see how it's doing and get a gauge of how you're doing relative to that and relative to the broader market as a whole. So all of that, again, for just $29 a month, or a little less than $1.40 a video, which is not bad value considering the returns you get off the trades that you get. Again, just one trade every day. It's a representative sample of the kind of trades we do during our regular classes that we have. Again, thank you for watching. Have a great rest of your weekend, everybody. Follow me on Twitter at DavidSettle42 for more content between the videos. And we'll see you with no Market Outlook video on Monday. I'm out of town on Monday, and we'll be back and see you guys again on Tuesday. All right, goodbye, everybody.